Welcome to Markets Now. I'm Michelle Rook with Dave Chatterton with Strategic Farm Marketing. Well, finally, a day where we saw grain and livestock futures in the green. Dave, we haven't had one of those days for a while. Let's talk about the grain side of things. Is this just a dead cat bounce? I mean, we were so oversold in all of these markets.
Yeah, Michelle. And so to risk the hate mail, yeah, I think it's probably just a bounce in an overdone market. We've been on a heck of a heater to the downside here, and unfortunately been making new lows in the row crop markets and testing the lows here again in the wheat market. And it's we've got a USDA report here, Friday that may or may not hold some surprises, but in the meantime, we did have some rumors on Thursday of China potentially stepping in for some U.S. corn. That follows their first purchase of U.S. soybeans earlier in the week. So hopefully there's some fire to that smoke. We haven't had any confirmation as yet. I think that helped hold us up just a little bit yesterday in the corn market. But after the report data, we're right back to trading weather and talking about yield potential. No indication here that we're going to get much in the way of bullish news from the USDA report. So we'll see what the numbers say. But really at this point, we need either some adverse weather here that threatens our supply or our yield, or we need better demand. And mostly that demand is probably going to have to come from China. And, so far they have been very patient buyers for those traditional or typical, fall shipments that they buy from the U.S. in corn and soybeans.
It seems like we've become a secondary supplier to China, but they do need to fill their reserves. So is that where we may see some of this business picked up?
Yeah, I mean, that's the speculation. How patient they can be, I guess, is a question mark. I think it's a little bit of a different year, Michelle, where normally they would have acted prior to where they're at. But with the market in a very steep downtrend, China historically is a value or a price sensitive buyer, and they're very savvy at timing the market of when they think they need it versus when the lows are going to come in. I think the other element here is political. They're in a situation where they're importers, and the political rhetoric that's picked up back and forth between the U.S. and China, and of course with the election cycle and some of the things that Trump is talking about if he were to be elected. I think the importers are very leery about being caught with extra stocks, which have a potential tax liability after the U.S. presidential election, or certainly after the inauguration. If there is a trade war brewing and things change, those purchases bought today for shipment, after the first of the year, near the first of the year, could be subject to a lot higher taxes. So it's gonna be interesting to see how that plays out on that front.
Yeah, I've been hearing more and more about that possibility. You mentioned the report coming up tomorrow, and I guess, we know that we had bigger quarterly stocks in the June 30th report. We also had the 1.4 million extra corn acres. So how do you think USDA incorporates all that together?
Yeah, I mean, USDA is known to throw us a few curveballs on how they incorporate that stocks data within the feed and the residual category. But that point aside, the balance sheets are going to get heavier. I don't see a way that they don't. It'd be, like, as we mentioned, be very unusual for the USDA to cut their yields here with crop ratings where they're at. Those acres are going to come in. The additional carrying is going to come in. They could make some adjustments on the demand side. I could certainly make the argument that corn export figure for old crop is a little bit too low, but beyond that, not a lot of bullish wrinkles here that we can identify at this particular point.
Absolutely. And the funds have fed on that. They've pushed back short in this market, near to record short, perhaps. Do they keep pushing that side of the market, do you think?
Yeah, Michelle, I think the momentum is definitely going that way. And we're in a world here where, 70 to 80% of the orders every day that go across the CME are generated by a computer. And right now, that computer sees momentum to the downside. And I think until somebody is willing to press back, funds are willing to probably continue to expand their positions. We did get a record corn short in the CFTC, or the COT data, last week that came out on Monday. I think, beyond the report, the USDA report, I should say, tomorrow, a bigger report, or just as important report, might be the CFTC data that we get Friday afternoon after the close, and showing exactly what these funds have done over the last week.
No doubt we're going to be watching that. I'm also curious, are those fund traders kind of programming in already that we're going to have trend line yields? Is that part of what they're trading here, incorporating the weather and the rains that we've had in the Eastern Corn Belt now?
Yeah, I think their yield ideas have been going up, whether it's the fundamental, market analysis, or whether it's the fund, and speculative type in the market. I think the range that we've had in the Eastern Corn Belt in particular, and just in my own situation in East Central Illinois, 4.5 inches since the 4th of July, really making a big difference in what we see out of our, in our backyard. But that combined with a little bit less moisture and a little bit of heat finally developing in the northwest part of the belt, pushing those yield ideas, I think, back towards trend or maybe even slightly above that.
So if that's true, Dave, where do you put price projections for new crop? I mean, you've seen some of the ugly figures from Farm Doc and others this week.
Yeah, it's going to be tough. I tell you what, we're looking at, trying to improve this. There's still a degree of old crop corn in the hands of the farmer. I think all producers feel undersold in terms of new crop, whether they're 0% sold, 40 or 50% sold. Everybody feels like they should have more based on this price action. But holding the $4 level in futures, we may or may not be able to do that. I can see some trade below the $3 level for some period of time. Cash basis will be another story to that. Beans, the same thing. I don't see a way where we're going to have a bullish scenario as we wind into harvest here.
Yeah, so you're saying $4 support may not hold in corn. What about beans and wheat? Are those support areas that we've bounced off of so far vulnerable?
Yeah, I think they are. I think this is all going to go together. I mean, obviously the row crops are the leaders here at this particular point. We were hoping we had a seasonal low. We've been back down to retest that low this week. So we'll see what happens. But corn and beans are steering the ship here, Michelle. And, we've talked before, we've had the discussion, this year kind of, or the action that we're getting kind of reminds me of where we were back in 2012. If you look at our current situation, and we made these, significant highs back in 2022, and we've had not a straight down, but a very difficult decline since that point to where we're at now. If you go back and flash back to 2012, we did almost exactly that same thing and finally bottomed in 2014 and did so. We got into that 350 handle in corn. We got into that $9 number in beans. We got into the 450 area in wheat for Chicago. And it was a very, painful time for producer margins on the farm. And we're winding into that. We've already hit into that range for corn at this particular point if we look at the D's contract. But what concerns us, I think, going forward is once we did that in 2014, that particular range, let's say that we'll call it I'll call it 320 to maybe, $4, lasted for almost 5 years, that entire stretch, 2014 to 2019.
Cattle market, a little uptick today after 3 pretty good down days. So with lower cash and cutout values, do you think this market can recover much further?
A little cautious on it right now. I think seasonally, this is the time of year, you get into the last half of July, first half of August, typically a seasonally weak time period for the futures market as we kind of pass that peak demand and get past the July 4th holiday, Michelle. Whether it's the cart, ahead of the horse or cart leading the horse here, is cash leading futures or futures leading cash? The cash has declined. The futures market has declined. Cash has been a little less reluctant to do so, but it is starting to get a little softer. Our cash trade so far this week, $1 to $2 lower. The cutout has been under some pressure here as well, or the product market. I think that's a little bit disappointing to the market or to the trade, particularly after the low slaughter numbers last week and a holiday week. We're going to bounce back with our slaughter numbers this week. It looks like that supply will stay high, and that combined with the seasonal weakness, these heavy weights, I think, we probably run into selling on any kind of rallies here going forward. We'll have to see.
Yeah, probably. Hog market, we just bounced off of yesterday's contract lows once again. But do you think, can we really build much on this considering that we still have big upfront supplies and demand has been somewhat flat?
Yeah, another tough export week this week. That doesn't help the hog situation any. Supply is the issue, and we continue to see our production numbers running above last year. And producer margins have turned negative, Michelle. So a little bit of that same type of dead cat bounce here in the hogs, but not enough to turn the corner technically here. The fund positions are relatively neutral here. They do have room to add shorts if they chose to. The market action just does not look good at this particular point. That can change quickly, but finding the buyer to come in here when we've got worries about the economy and other things going on, we've got supply, we've got heavyweight hogs, just like we do in the cattle, the production, that's helping the production numbers here. And so I think it's a tough haul to the upside here at the moment.
All right. Thanks, Dave Chatterton with Strategic Farm Marketing. That is Markets Now.